Hello everyone, Kevin Doherty with Loan Depot. Thanks for joining me here today on session 3 of my Road to Home Ownership series. Today we're going to be discussing assets. Sometimes people question what exactly are assets. This of course is going to be the monies that you're going to need to get the deal done. Your down payment, your closing costs, your tax and insurance escrows, your reserve requirements. No, it is not your baseball card collection. It is not your custom car collection. These are liquid assets we're going to be using for the loan. So join me and let's dive in. Now here at Loan Depot, we've got a great system set up to where I can digitally verify the assets directly from your bank account, and I may not need to get bank statements from you. In the event that your bank does not participate in this direct verification, I will be asking you for 2 months consecutive bank statements to document the monies that you've saved up, the money you've got available, and the money that you're going to need for getting to closing. Now, one of the big pitfalls that we have to look out for are large deposits. Large deposits are typically going to be greater than 50% of your monthly income in one large chunk. Now, these are easily explained away. If perhaps you sold a car and you deposited the money into the account, we just need to properly document it with a bill of sale to show that you've sold a vehicle and deposited the funds. In the event you're going to be receiving gift funds, I would ask that you do not deposit that right away. It does have to be documented properly. Gift funds can be received from mom, dad, sister, brother. Generally, family members are eligible to gift you money, but it does have to follow the process to be properly qualified to use. So I urge you, do not deposit money from mom or dad in cash or anything like that until you've spoken to your loan officer so we can properly document the funds to be able to be qualified. So in the process of getting a mortgage, any monies that you're going to be using for the transaction have to be what are called sourced and seasoned. This means that the money has to have been in the bank for a minimum of 60 days. And this way we can document you've had that and there's been no large deposits coming out of nowhere. Now, I urge you to not be moving money around, as it makes my life a lot harder and will drive you crazy. But if you're moving money from your investment account, selling some stocks from Fidelity or E-Trade or whatever, and you move it into your bank statement, that's not a problem. It's easily qualifiable and we'll have no issue with it. Where you're really going to run into a problem is going to be those that have saved their money in cash. Cash in the mortgage world is basically unqualifiable. In very rare circumstances, cash on hand can be used. But in this case, if you're getting a mortgage, you need to have the money in the bank, sourced and seasoned for 60 days so that you'll have no issues in qualifying the asset. Now, I jokingly stressed earlier about the need for having the complete bank statement from you. But if it wasn't such an issue and clients just didn't understand the reason for it, we wouldn't be making up memes such as this or this or this. It is important. We would need all pages, even if it says this page is blank. So this was a pretty basic explanation of what I need to go through when qualifying assets on a mortgage. But if you have any questions, certainly give me a buzz, 631-514-1592. Otherwise, please like, share, subscribe, and follow, and stay tuned for lesson 4, where I'll be discussing down payment, otherwise known as earnest money, and the use of gift funds. Until then, have a great day.